Hey guys, welcome back to week 4 Financial Literacy Month. Congratulations to week 1, 2, and 3 winners of the Apple Bundle package. This is your last chance to win, you guys, so let's finish strong. So today we're going to be talking about save and build for the future. And so how are we going to be saving and how are we going to be growing your money in general? And so that's what we're going to be talking about today is how to save and to build for your future. And so, of course, as always stated, this material is not intended to constitute any tax, investment, or legal advice. If you need investment, legal, tax advice, and/or credit counseling, please consult with a professional within those areas. So again, how to save money, how to build for a future. So first, we're going to be talking about savings and checking accounts. And you're probably like, really, Miss Rehome? Like, I have a savings, I have a checking account. But what about for those of you who don't have a savings or a checking account? Yes, we've talked about Banking 101 in previous videos for the first month it rolled out in 2021, which I believe it was in January that we talked about Banking 101 and understanding the difference between your brick and mortar and your credit unions. And for those of you who didn't watch it, it's totally okay. Okay, so let's move forward because we're going to get down into it. So savings and checking accounts are a great way to start saving. And if you've never done so before, this is how you start. These accounts are safer than carrying larger amounts of cash on you or stashing it away somewhere in your room. For example, my mom likes to hide money throughout our house. She doesn't live here in San Antonio. She lives in where I grew up. But for the longest time, she would do that. Now she has a bank account. She just always said, I never trust the banks. What if they lose my money? But again, this is a way to get you to start being repetitive in keeping track of your money, right? Excuse me. Banks also guarantee that you won't lose the original amount of money you put into your bank account. This is called the principal. Savings account and checking accounts are insured by the Federal Deposit Insurance Corporation, and that total is up to $250,000. So your money is insured up to $250,000. Many people who do not have checking accounts or savings account cash their paychecks or your tax refund at the grocery store or check cashing store, but that costs money because you have to pay a fee to the store for cashing that, right? So every time you cash a check at one of those or I wouldn't say institutions, but stores or places of employment, whether that's for you or someone else, you have to pay money to get your check cash. So do you really want to do that when you can just open up a bank account for free? Again, very important that if that video for Banking 101 is still up, that you look at that, because for a brick and mortar, you do have to pay. Where a credit union, there might be some fees, but they're not hidden. They tell you everything up front, where brick and mortars kind of hide those fees. So please look at those videos or go to our financial literacy page, SPC Financial Literacy on Instagram, so that you can look at the slides about Banking 101. So it's very important that you understand that there's fees included when you go to those grocery stores or check cashing stores to cash your check. Saving money in a savings or checking account is also a good way to help you reach your goals in short or medium term goals, right? This could be paying for monthly bills, unexpected car repairs, a new cell phone, keeping financial aid refunds, your paychecks are safe and easy to access. Your medium term goals could be like buying a car or saving up for you to go on a trip, to Europe or overseas, and your checking or savings account can also be a good choice. Now, remember, it's all about, setting these goals, right? So it's very important, right? When we first started Financial Literacy Month with being financially healthy and setting those financial goals with Credit Human, their #1 video for week 1 was talking about being financially healthy and setting financial goals and how it's important to aim towards a goal, right? So it's always good to create short, medium, and long-term goals. Having an emergency fund in the bank account can help you protect against unexpected expenses like car repairs or running out of printer for the ink or ink for the printer.